Gautam Sinha Roy is Executive Vice President and Fund Manager at ICICI Prudential Life Insurance. Gautam, good to have you with us here. Thank you very much. This news on Equitas is coming in now. Approval from the Reserve Bank for DSP to be able to buy, just under 10% in Equitas Small Finance Bank. I don't know if you have a view on the sector. If you do, would be good to get that at this point in time.
Yeah. Good afternoon, gentlemen. I think the sector view broadly remains positive because we are seeing credit growth in the high teens, NIMs are expanding, credit costs are benign. So we have all the parameters for financials, especially the lenders, which are lining up in a very robust way. ROAs are improving year on year. So the good part is increasingly we are seeing even the smaller financiers and the ones which have been beaten down earlier, they're coming back into the fray and they're doing better. So that's a very healthy sign, I would say, not only for the sector, but for the broader economy too.
Okay. Right. All right, Gautam, just hang on to that. Just looking at the shareholding right now, in Equitas, that's Equitas Holding Limited, out there, DSP Mutual Fund have close to around 8.5% stake. That's in Equitas Holding. And I think they also have a stake, in the other listed entities. So I think post-merger, I guess, we're still waiting for further clarity. But effectively, I think what it means is now, post the merger or whatever, they are being given that approval. That's what it appears like as of now.
Which is why the stock is also off the highs, because what it appears, I'm reading just from the letter, it says that the proposed acquisition of shares by DSP IM would be consequent to the scheme of amalgamation of Equitas Holdings, which is the holding company, with the bank taking effect. So it is no fresh investment which is coming in. You hold about 8.5% stake in the parent. You hold some stake in the entity which will be amalgamated. Yeah. So together they will hold about 9.99% stake in the company. And I presume it is something of a regulatory requirement for an institution to hold 9.99% stake in the company, which they have gotten now. So it is no fresh capital coming into Equitas Small Finance Bank, is what we understand so far. Is just a regulatory nod that they've got.
A single entity in a bank can only hold max limit is 10%.
Yeah, so I guess that's the approval that what it is. That's the approval that they have got. But we're waiting by. Abhishek will join us in just a bit and give us further clarity. Our team is working on the details in that front. Hi, Gautam. Good afternoon. Sorry we had to come in on that. But, what about the markets? How are you approaching it? We have had a dream run. We're dancing away every day that, in fact, we have been the big outperformers in 2022, decoupling, etc. Are we getting over-optimistic? Is it time to get a little bit cautious?
Well, yes, that's the big debate, Nigel, in everybody's minds. That, touch wood, we have been such big outperformers compared to the rest of the world. How long does this last? I think much will depend on how flows shape up from here. Because if you see the course of this year, either domestics have been buying or FIs have been buying, right? Either of the two at least have been biased at any point of time. So we have been fairly lucky in that sense, right? So I think the focus from here on would be on flows, both domestic into equities as well as the overseas FI buying. Because if both soften at the same time, that is where the correction will come. And one can expect that to happen at some juncture. One can expect that to happen. But nevertheless, I think Ps have corrected for a large chunk of the market. I think the P dispersion that we were seeing, let's say in December 2021, where certain stocks were very expensive, certain ones were quite cheap, that P dispersion has reduced dramatically this year. So there has been some correction in the market. It's not that everything has been hunky-dory. The index levels reveal something. They also hide a lot of things. So we should not go just by the index levels. But I would also think that if there is a meaningful correction from here, because of the flows particularly, that would really be a good buying opportunity. That would give us a decent buying opportunity because of the simple reason that India continues to be one of the fastest large growing economies in the world, right? So that's a very unique position we are in, given our size, given our growth rates, structural growth rates, which means that the opportunities for stock picking will abound if valuations really correct from here.
All right. A bunch of these mid and small cap names are doing extremely well. Some of them belonging to the PSU space as well. Dredging Corp, for instance, a big surge is what we're seeing on that counter, up at the high point of trade. Most of the gains, in fact, have come by in just the last few minutes. Or there you have it, a vertical spike on Dredging Corp. And the other one which is doing well is Cochin Shipyard. In fact, Cochin Shipyard has been one of the big outperformers of this year, up 91% for this year itself, along with a lot of the defense names which have been doing well. Gautam, in the past you've liked a lot of the small and mid-cap manufacturers, so to say. Can you nudge us in what direction are you looking at, or what direction one should look at when one is looking at these companies? Because over the last month or so, we have seen the mid and small cap stocks actually underperform as against the index.
Correct. That's absolutely correct. So I would say that one should be conscious of valuations in this juncture, because what we are seeing is for growth companies globally, valuations are correcting. Keeping that in mind, if you get the correct valuation, the growth areas are in some of these manufacturing companies. This is largely because of the PLI schemes and the nudge from the government for domestic manufacturing. That should remain a decadal theme, I believe. At least from where we stand today, the visibility of that theme continuing is pretty robust. So these remain good long-term structural opportunities at decent valuation. They should be looked at into. But again, that theme of valuations of richly priced companies correcting is a omnipresent theme today in the entire world, and that probably is dictated by the cost of money going up because of the US Fed rates and the US inflation levels, creating expectations of future interest rate hikes. So that construct has not changed, honestly. Maybe we are towards the fag end of that construct completely playing out, but at least for now that remains. So one should be very conscious about valuations in terms of taking their buying decisions in this current context.
And we've had enough of these disappointments, right, Gautam, in the quarter gone by, in large caps, mid caps. Take Campus Activewear as an example, where earnings missed big time, and other footwear stocks as well. But that's just one area. We had many others, and these were all very highly, richly valued companies. Yeah. And the price damage in a short time span has been significant. Are there these kind of landmines spread all through sectors, even in manufacturing? I mean, while long-term growth prospects are great, but these are also sectors which have done well.
So yeah, that's a very important point, Prashant. We have discussed this in previously too. If you just step back into the end of 2020, right, the extrapolation of growth that was happening, probably because of open up, probably because of multiple other reasons, was great, right? People were just extrapolating that growth into the future. The growth expectations from the broader market, and I'm just not talking about specific subsectors like footwear, that also is true, but I'm seeing that broader growth expectations were pretty high. Now, if you look at the entire market, I would think that financials is one sector which has lived up to expectations. The lenders have actually, many of them have beaten expectations very handsomely. But if you look at X of lending, there would be select consumer durables where expectations would have been met, or retail stocks, hospitals, some specific sectors where, of course, expectations have been met or beaten. But on the other flip side, there have been a slew of sectors or stocks where expectations have been disappointed, and sometimes massively disappointed. And that is where you're seeing the very, very sharp price correction. That's why I'm insisting that this is a market where you have to be conscious about valuations. And of course, you always have to be conscious about growth, right? If you get your growth call wrong, anyways, you're going to suffer. But today, the growth disappointment is compounded by valuations correcting very sharply in such stocks, even if the long-term growth construct is good, as you rightly pointed out.
Okay, all right, Gautam, thanks so much for stopping by and filling us in with your view on the markets as well as a couple of industries that we discussed. Look forward to chatting up with you rather soon. By the way, keep an eye out on the index. Well, the Nifty bank that is otherwise trading in the green, that's come off a little bit from the top. That 3 p.m. move, nothing really major is what we are seeing, but the Nifty has moved a little bit lower in the last few minutes, so just keep an eye out on that front. HDFC, that's the larger name in there, that's moved to the low point of the day. So pull up the intraday chart on HDFC. That's the one that's moved a little low as we speak. For the time being, we'll slip into a short break, but as always, on the other side, our technical experts will be back with us.